you're pretty much on the money when it came to these figures. Where do we go from here?
Well, the inflation figures are pretty much in line with expectations. Where we go from here is actually inflation, inflation, inflation. In the next
it's going to get worse than you're saying?
Well, it could in the next month or two. However, we do expect inflation to begin moderating sometime in the third quarter of this year. We had a slew of monetary tightening already from China. Food prices should begin to subside after the end of the drought situation in China. So sometime towards the end of the third quarter, inflation should begin to moderate.
And growth will have cooled down a bit as well? What are you thinking there? Because I had somebody on earlier. Their house view had actually reduced growth at 8.7% for 2012.
Absolutely. China had come from a situation of overheating in the fourth quarter of 2010. Now, in the last several months, we're seeing indicators pointing to a moderation in the economy. Of course, power shortages in the last couple of months actually have also played into the moderation of the economy. So we're basically going to see a gentle slowdown. We are actually expecting a soft landing of the economy. However, in the meantime, people continue to watch those inflationary indicators very closely.
They do certainly do that, and they don't put their toe into the water when it comes to the equity markets, do they?
Well, you know, I think equities around the world have been suffering in the last couple of months because of rising concerns about the global economy, about the European situation, as well as China. In China itself, investors don't have a lot of confidence in equity shares as of now.
Why is that the case? Is it because they saw such a pummeling that they took and decided, okay, we can go in the housing market easier?
Well, at this moment in time, inflation is something everyone is watching. It is very difficult for the equity market to stage a major rebound until inflation actually peaks.
Right. Well, it peaks a couple of months from now is what you're suggesting, but then we see the moderation. But is that really largely due to base effects?
Well, inflation moderating is partly due to the base effect, but also it is a result of the various tightening programs we've seen since really about a year ago. In addition, I think we're seeing China's monetary supply beginning to moderate. We saw yesterday's loan figures beginning to moderate. All this will play into slower inflation in the fourth quarter of this year.
Right, so many people are predicting further tightening in the next, if some have said, in fact, in the next few days, and it should have happened already, as others are saying. But if, you know, your scenario plays out as it is, why bother?
Well, there may be one further rate hike in the coming few months and one additional tightening of the reserve ratio. But we must keep in mind this round of inflation is caused by higher agricultural commodity prices and higher natural resource prices. So none of this can be sorted very easily by tightening monetary policy.
You can tighten, so you can do something about the high energy prices, I suppose, by using the other lever, which there's a reluctance to do, which is, of course, use the currency system.
I think China is beginning to use the exchange rate as a tool to moderate inflation. We're seeing the RMB increasing against the U.S. dollar slowly but steadily.
Slowly being the operative word, though. Very slowly. I mean, moving at the speed of continental drift, some would say.
Well, you know, this year we're expecting 5 to 7% appreciation of the RMB against the U.S. dollar. Next year, by the same magnitude. So 5 years from now, the RMB should be quite a lot stronger against the U.S. dollar.
Okay, but it's all about also changing the whole dynamic of the Chinese economy, isn't it? Moving away from the export-driven side of things to actually becoming more domestically driven. And that's the 5-year plan. How does it achieve it? Will it be successful? And how long will it take?
Well, we're beginning to see the transition
of
the economy away from the dependence on exports more towards domestic consumption. So that transition is taking place as well. Another important theme in the 5-year plan is basically one of economic equality, meaning China is trying to narrow the income gap between the haves and the have-nots, between the coastal region and the hinterland. So we're seeing a lot of investments going into the hinterland of China. Incomes in the central and western part of China are actually rising faster compared to the coastal region. So the domestic economy is indeed humming along, especially on the service side, on domestic consumption, retail, entertainment. All these sectors are going to do very, very well in the next several years.
Jing, thank you so much.